do things for self gain. And I feel like the biggest investment is people. I think the biggest investment is taking care of people and sharing, the knowledge that you have, because it does no good for you to go to school, go to college, and you got a whole bunch of degrees and letters out for after your name, but you're not, sharing that knowledge and information and education and your experiences. And so I appreciate all the sevens. I see them flying in. I appreciate all the love. And I want all of you to know to understand that you are somebody and you are a leader. All right. I want you to know that first before we jump on any charts, before you learn anything about Forex. I want you to know that you are a leader. And whether you know it or not, people are watching you, people are listening to you. You may not know it. You may not know it, but people are watching you. And you probably have some unofficial mentees out there, even though you may not have made yourself available to be a mentor. You may not feel that you're in the position to mentor anybody, but guess what? And listen, y'all gonna hear me talk about God, so I'm not trying to offend nobody. If you don't believe in God, I apologize uh, for your lack of belief. But I believe that God put everybody on this earth for a reason. And so, charity, aka love, right? Because charity
Yes,
starts at home and
sir.
spreads abroad, right? The greatest of these things is charity. Come on now, we look, her name preached by itself. So we have to look at that as knowing that people are watching us, listening to us, and I believe that God put us on this earth for a reason, to be a blessing. Okay, to be a blessing to other people. And money doesn't change you; it just magnifies who you are, and it gives you access to things that you didn't have when you didn't have money. But if you a kind, loving, giving, long-suffering, forgiving person when you broke and busted, you know, when you get money, those character traits don't change. All right. But money can expose you. It can expose you, and it can expose things to you that you didn't have access to before. That's whether good or bad. Okay. That's right, Lamont. That's my brother in Christ right there. Been rocking with him for a while. But yeah, I don't apologize for serving the true and living God, but I apologize for people who may not understand that they're here and they were created by a creator. So but with all that being said, money is something the scripture says money answers all things. And many people get it misconstrued and they say that money is the root of all evil, but it's for the love of money is the root of all evil. And if you're worshiping anything, not just money, anything that you make your God other than the creator can cause some problems, right? You want to kill for it, you want to steal for it, you will lie, you will cheat. And that's not something that we want to do. Okay. And understanding the skill set that we're learning here in Forex, in Tradera, it's a blessing because, the scriptures talk about trading your talents. And that's referring to money and casting your bread upon the waters. And I think the New Living Translation talks about trading the foreign exchange market, because you don't know what bad luck the world is going to bring, so on and so forth. um, and multiplying. And this is one thing that I love about God, because, he adds and he multiplies. Okay. The devil, he likes to subtract and divide. And so I'm a big stickler on adding to and multiplying. So I don't know, what you know, I don't know what you don't know. But I'm going to share to the best of my ability the things that I do know. And I pray to God that, you guys learned something tonight. So I'm going to go ahead and share my screen. I'm super excited. I'm fired up. All week. I know Charity was like, "Hey, you gonna be the speaker?" I said, "Sure." And I'm just excited to be around, people that have the same goals, and that's to be uh, wealthy. I'm not saying just to be rich, because you could be rich in 24 hours and lose everything. Just that's what happens with a lot of people that win the lottery. If they don't have guidance and they don't have proper plans and like trading their plans and planning their trades, right? You can lose everything that you have. But wealth is generational. I'm gonna say that again. Wealth is generational. We want to be able to teach our children and our children's children how to establish and build wealth. Okay. And I think that that's very important. And not only does money make you wealthy in that aspect of finances, but health is wealth, right? We always hear people saying, health is wealth, because it's cool to have billions of dollars, but if your health is poor, it's kind of hard to enjoy it. But mainly, most of all, I know people that are sick and have compromised immune systems, but they have peace and they have joy, and they know how to spend their money and share their money and share their wealth and knowledge. And just because they have a sickness or disease, or they may be operating with a disability, they have peace in the wealth of joy that God gives them. Okay, so that's super important. And we're gonna talk about that a little bit. Charity, do you mind if I open up with prayer? I mean, I know I know some people might not be for praying, but I like to pray before I do anything on the charts or sharing anything. Um, I'm gonna pray. Anyway.
No, yeah, you're fine. It looks like everybody's asking for it.
Look, I see it now. I see it. I asked, but I don't know how much time we got. I'm not gonna hold you too long, but I'm gonna drop some nuggets and get out y'all way. So all hearts and minds clear. Heavenly Father, we come to you in the name of Jesus. And Lord, we ask that you would wash us and cleanse us and purge us of all unrighteousness. Lord, open our eyes of understanding. Lord, remove all hate, all unforgiveness. Lord, we ask that you would be with us during this time, during this session. Right now, Lord, I ask that you would meet every person's need, whether it be mental, physical, emotional, spiritual, whatever the problem is that they may have and face, because we all have trials and tribulations. And Father, we know that even Jesus learned obedience through the things that he suffered. And we're all going through this time right now with this COVID-19 and other situations and problems that we may face that we may not even tell our spouses and our family members. But Lord, I ask that you would make a way. Lord, open the eyes of the unbeliever, and those that believe, Lord, help our unbelief. Lord, I ask that you would help us to be financially sound, and show us how to be good stewards over our monies, and help us to be faithful over few things, because you make us ruler over many. Lord, I ask that you would bless everybody under the sound of my voice in Jesus' mighty name. Amen. Amen and amen. All right. So I told the Lord that, if he showed me the way with this trading and show me strategies, that I vowed and I promised that I would give him glory and honor. And formality, I like to ask for permission before I just, I'm on other people's Zooms, but, I'd be remiss if I didn't pray, because I am who I am by the grace of God. And I've been through a lot. I've seen a lot. I didn't always have money. I grew up in the projects. I'm from 73rd and Huff, Cleveland, Ohio, on the east side, right? I've been exposed to a lot of things. I've seen a lot of things. Joined the military at 19, seen the world, seen a lot of places that people, you know, may never see. And that's only because of God. Okay. And so, and I'm not saying that to impress anybody, but to impress upon you, you all are in the right place. Okay. This is not by happenstance. I don't believe in coincidence. I believe that God has ordained all of your lives, right, for us to come together for such a time as this. And this is definitely a serious time to get a hold of the skill set. If you just now plugging in to trading, I definitely encourage you to take hold of this. You're gonna learn something. You're gonna get on the charts. You're gonna be like, I know what I'm doing. And then you're gonna be like, do I know what I'm doing? And so I just want to encourage you that it's definitely a journey. Okay, and in regards of you meeting people that trade, and whether they're 6-figure earners, 7-figure earners, it's definitely a journey. Okay, we're all learning. Don't be taken aback by anybody's titles. Don't be taken back by what people say they make. Don't don't be intimidated. Okay, because people have things in 1 minute. Sometimes they can lose it in the next. So you just want to be aware of your surroundings and pay attention to what's going on. All right. And if you see something, not right, pray for them. You know what I mean? Pray for the people because we all need it. All right. You never know what people are going through, regardless of what their status is. All right. But it's a blessing for us to be here and breathing. And let me see. Am I sharing my screen? Can you guys see my screen?
Yes.
Okay.
Yes.
Okay. Awesome. Awesome. All right. I'm done with all my rambling. All right. So type of one, if this is your first time hearing anything about Forex, I know some people might have just joined Tradera or the study group. Um, type of one, if this is your first time, you may not even got into the back office yet. I just want to know, who I'm working with, because I can kind of be um I don't want to be too advanced when we have a lot of new people here. Okay, so I see a couple ones. Okay. Cool, 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 cool. All right. So I'm going to pull up a blank chart, no indicators, nothing. And let's see if it's going to cooperate with me. Let's see. Come on. All right. All right. So basically, for those that are brand new, Forex it stands for the foreign exchange market. Okay. Some people may not know that, but that's what Forex stands for. I know when I first heard about it, I thought it was the number four in the letter X. Like that's like that's how off I was when it came to Forex. I didn't know anything about it. And uh, the number one thing when I first heard about it, one of my boys on Facebook back in 2013, um, he hit me up and he's like, "Yo, you gotta check this out." And it was a previous educational platform, and I said, "Okay, sure, I'll check it out." He's like, "Yeah, I'm in school and I'm doing welding, but I just disenrolled from school because I just made $10,000 this month, um, looking at some red and green blocks or red and green candlesticks." And I was like, "What? You looked at some red and green candlesticks? You selling Avon? Like you make you made 10 grand selling candles, bro? Like what?" He said, "No, it's kind of like the stock market, but actually, it's bigger than the stock market, and all the people that trade in the stock broking the stock brokers world or realm, they understand the exchange." And he was just like, "Look, man, you got to check it out." And he was like, "Yeah, I know you in the military, but are you going to be in the military forever?" And during that time, I didn't know that I was going to be separating from the military. Right, I got out of the military in 2015, and I did not know that that's what was going to happen during 2013. So I started, learning a little bit about Forex, and it was kind of tough during that time because I actually just gotten a divorce, and it was just tough, getting separated from the military. I was separated from my wife, got a divorce, and it was just frustrating. You know what I mean? I didn't know what I was going to do, how I was going to pay my bills, and I'm gonna tell you right now, the number one golden nugget that you want to take down right now. If you got a pen and piece of paper, do not trade when you are emotional. Do not trade when you are emotional. If you're brand new, if you not new, if you've been trading, listen. When I say emotional, I'm talking about happy, overly stimulated, super excited. You know what I mean? Um, don't do it. Okay. When you're frustrated or you have anxiety, don't do it. Okay. Now, again, I was in the military for 8 years. I was a hospital medic. So I've seen a lot of trauma in my life, having night terrors and all of that PTSD, anxiety, depression. Listen, okay. I didn't, I listen, God's still working on me. I'm not perfect. You have emotions. It's normal. Okay. But do not trade when you are overly stimulated. Okay. Whether that's angry, happy, stressed, frustrated. And if you're trying to make money to pay your rent or your car note or your cell phone bill or you need money, don't trade either. And I know that sounds crazy, but Don't do that because you're trading out of frustration and anxiety because you have a bill to pay. And if you have a bill to pay, we all have bills to pay, we all have expenses. But learn the skill set first. Okay. Now there's been times where I've been stressed out and mad, but I have a something called a trading journal. That's the second thing I want you to write down. So don't trade when you're emotional. Have a trading journal. So if you don't have a trading journal and you've been trading for 2 weeks or more, you're wrong. I'm gonna just tell you, because you want to make sure you're writing down your wins and losses, right? And if you write down a trade that you've won, you want to repeat those steps. You want to rinse and repeat. Okay. The third thing, you want to have a trading plan. Your trading journal is not your trading plan. Now, you can use your trading plan and journal your plan, right? So if you get into a trade and you're using your plan, you want to make sure you're journaling your plan. Okay, my goal is 5% today, 10% today. I either hit my goal or miss my goal. If I made my goal, then I want to make sure I annotate, how many pips I made, what time it was, what time of day it was, what pair that I traded. Okay, seriously, you want to make sure you're trading with the plan, right? Because if you don't plan, then you fail. Because if you plan to fail, right? I mean, if you fail to plan, you plan to fail. All right, that's what we say in the military. All right. If you plan to fail, then I mean, if you fail to plan, then you plan to fail, right? And so wealthy minded people, they keep their expenses at a minimum. Write that down too, right? And I'm not in anybody's pockets or in anybody's business, but they tell you, if you show people, your top 4 or 5 friends, and if they're wealthy minded, if they have aspirations and goals, right, then you'll be the sixth person. You'll be the sixth friend that's like that. Even though you might not start out that way, but if you have friends that are operating at a higher frequency than you, and they have goals that they're smashing and crushing, and you can go to them and ask them, hey, what are you doing? Then guess what? You'll be successful too. But if you're around, if you've got 5 broke friends, your best friends are broke and busted and disgusted, guess what? You're going to be the sixth, right? So that's another thing I want you to write down. You know, befriend people. I'm not talking about acquaintances, people that your work best friend. I'm talking about befriend people that you can learn from, right? And I'm not saying call them every time you have an issue and problem. Woe is me, I got this problem. But if you see they have something that you want, now I'm not saying covet what they have, but talk to them and say, hey, how did you make 5 figures? How did you make 6 figures? How did you make $100? How did you make $50? Right? What strategy did you use? Okay. Another thing I want you to write down is right, figure out what type of trader you are. And I loved it. Charity asked me, she was like, what's your favorite trading style? Right. And my most favorite trading style out of all is scalping. So you have scalping, you have intraday trading, and you have swing trading or day trading, right? You have day trading, and then you have swing trading, right? So scalping, you're looking for maybe 5 to 20 pips. Okay, the max is really 20. Now, when you start getting into 50 into 100, now you're intraday trading. Sometimes it can go over to day trading. Okay, depending on how the market is moving, right? And then your swing trading can take days or weeks at a time, and sometimes months. And I know somebody, right, that's trading throughout the year. They're holding trades for months at a time. They got a whole savings plan, and they're trading, holding trades for months at a time. Okay, now you got some big money to handle those swings and those ups and downs, right? A couple of people, but you have to figure out what kind of trading style you have and write this down. Babypips.com. If you've never heard of it before, babypips.com is free 99. You don't got to pay for nothing, right? You use that. It's going to take you from like preschool to like 12th grade or something like that. And it's going to tell you what a pip is. It's going to tell you what the difference between the stock market and the foreign exchange. It's going to tell you these things. Okay, I think it's very important for you guys to get the basics. Now, you're in Tradera, you're going to get the basics. Okay, and they're going to show you how to get in and out of the market. And we have remarkable times that we have outside of Tradera to show you how to trade as well. Okay, But knowing what type of trader you are based on your schedule is important. I see my sister Danae. I see you, sis. I know she has a busy schedule, and we always trying to link up. She's like, "Yo, bro, I need to," Shinda helps her out because she plugged her in. But based on your work schedule, whether you work in the day, at nighttime, in the afternoon, you need to know what type of trader you are, and that's going to help you also to determine what pair to trade because not all pairs trade at the same time with the maximum amount of volatility or movement in the market. So that's very important. Now, in the beginning, when I tell people, looking at the charts now, okay, we looking at the charts. So those are some of the key things I wanted you guys to write down and to put into practice, right? Because how many people know that knowledge is power? Type of one if you believe that knowledge is power. All right. The first thing I tell people to do or to trade is Euro USD. And the reason why I tell people to trade that is because, you know, um, it's pretty structurally sound. Okay, and what I mean by that is, it pretty much does the similar thing or the same thing around the same time every single day. All right, and there's another thing that I want you guys to remember uh, or learn is the candlestick patterns. Okay, and I know some of you probably heard of that before. You probably been on these calls before, but candlestick patterns are super important because it's going to help you to see when the market is reversing. Okay, when the market is reversing, and I'm going to show you some quick tools to help you if you because one thing for sure, um, one thing that I learned growing up, my mom used to always say, "How did you forget that? Why you didn't write it down?" Right? Write the vision and make it plain. If you write it down, if something happens to your mind and to your body, you write it down and you look at it and you read it over and over again. Don't just write it and tuck it under your computer, but you want to write it down. And what I do is I write things down, or if you got a printer, print it out, put it on your wall because I can't remember everything. Right? My mom says that a short pencil is better than a short memory. Right? That's the reason why they created the quill, the pen, and the pencil, so you can write things down. Right? You don't have to be a genius and memorize everything, right? Really, schools just teach you how to memorize stuff. Um, and then after you don't use it, you just data dump it. And I see all the ones and people saying that knowledge is power, but you're wrong. Applied knowledge is power. Just because you have knowledge don't mean that it's gonna power anything. If you know how to turn on a car and you don't put the key in the ignition, right, you're not gonna be able to start it and it's not gonna move. So you have to have applied knowledge. And not only applied knowledge, but you want to apply the right knowledge. Okay? Because how many know you can apply the wrong knowledge and kill somebody or hurt yourself or hurt somebody else? All right. Valerie said, good fake out. Right. You like that retracement I did? But yeah, so that's applied knowledge is power. The right applied knowledge is power. Okay. So I'm going to show you some things that I used to help me secure consistent pips in the market and using Euro USD. Now, I'm not telling you that this has to be your pair, but if you're just starting and you're able to trade this, I believe me personally. Now, this could be my own opinion, um, but the most effective times for Euro USD, and I trade GBP USD, but that's a little bit more volatile. They move in the same direction. The thing with Euro USD is it doesn't wick as much as GU. Okay, it doesn't have a lot of exhaustion candles like Great British Pound and United States Dollar. Now Euro USD, if this is your first time getting on a session like this, EUR stands for Euro and USD stands for the United States Dollar. Okay, now the EUR is your base pair, okay, or your base currency, okay, whichever one comes first, that's really in control, okay, and then the symbol after that or the currency after that is called your quote pair, okay. Some of you may not know that. If you do know that, cool. All right. So if the market is going up, now this is going to be super simple for y'all. All right. If the market is going up, meaning that it's making a trend up, right? You see a up movement. down movement, up movement, down movement, up movement, down movement, and it's moving in a diagonal line going up. That's called an uptrend, right? Super simple, super basic. Okay. So that's saying that the euro is stronger than the United States dollar. Okay. Now, if the market is going down, let me kind of go back a little bit. If the market is going down or pulling back, right? This is the 5-minute chart, so it's moving a little faster. But if the market is going down, right, down, up, down, up, but it's moving in a diagonal motion or move, that's called a downtrend. And because the United States dollar is the quote pair, that means that the United States dollar is stronger than the euro, so it's bringing the euro down. Okay, if the United States dollar is strong and the currency or the charts, the prices of the candlesticks are moving down, then that means that the United States dollar is stronger. Now, is everybody following me? Type of five if you understand what I'm saying, because I don't want to go too fast. I know some people might not even know what a candlestick is, right? Some people might not even probably was like me and they thought forex was the number four and the letter X. Like like that's how unaware I was. Okay. Now, the foreign exchange market is really comprised of the world's currency. Okay. It's not just the United States dollar. Every country has, please do not write on the screen. Okay. Please be respectful. Don't write on the screen. All right. Thank you. All right. So make sure when you're looking at a pair, the first thing you want to do, and this is really what I do on my sessions Monday through Thursday. I do a top down analysis. Whoa, let me erase this stuff. But I do something called a top down analysis, and I start from the daily chart. I call it a stoplight TDA, right? Stoplight top down analysis, and I'm going to show you why. Um, I call it a stoplight TDA. Hey, Charity, how much time do I have? Because I don't want to. I know sometimes our attention span is like 20 minutes and 30 minutes, and y'all like, okay, you boring me. I'm ready to go do something else. It's Saturday night, all right?
You're still good, Clyde. You're still good.
Okay. All right. So basically, what I do is a top down analysis. And like I mentioned before, I said that is the foreign exchange market is comprised of the world's global currency, right? The Rothschilds had children and some other wealthy people in the world. They created this banking system, and they have banks, right? Federal Reserve. They have central banks, centralized banks. They have global banks that really don't really have too much to do with the actual country itself, but move money. Okay, um, and the exchange has been around for eons, okay? Since the beginning of time, there was a bartering system, okay? People said, hey, I give you my potatoes for your corn or whatever, right? Before there was actual physical cash and currency or fiat, right? There was a bartering system or an exchange. Now it's called the foreign exchange because there are foreign currencies that are being exchanged. And the United States dollar is not the strongest currency in the world. So I don't care what you say. Look, I'm from America. I'm from the United States. It's not the strongest currency in the world. Okay. Between the Iraqi dollar or the Kuwaiti dollar, that's the strongest money. Okay. Right now. Um, and the United States is just printing so much money, it's really causing the dollar to depreciate. All right. Now, before I go into marking up my charts, this is what I tell everybody when they get on my session. Before you look at a chart, my motto is for you to be the signal, right? And not just take signals. I want you to be the signal. You understand? I want you to type in the chat, I am the signal. Now, before you get into a chart or before you get into a trade, I tell people to go to forexfactory.com, right? Now, I just told you all that the foreign exchange market is comprised of global currency, world's currency on the foreign exchange market. Okay, now there are some countries that have their own money in fiat. It's not listed on the foreign exchange because either they got into a war or a battle, with a different country, and the country maybe took over that country or whatever, and they devalue that country's currency. Okay, like the Zimbabwe dollar and some other countries, right? They're not listed on the foreign exchange market. So, what I tell people before you get into any type of trade, go to forexfactory.com. Okay. Now, you have different types of currencies. You have Forex major pairs, right? Those are the major countries that hold the most weight and value. Then you have exotic pairs or cross pairs when the major currencies or countries trade with other countries whose value is not as strong as that current country. Okay. Then you have precious metals where you can trade gold and silver, palladium. You can trade different precious metals on the foreign exchange market. And then you have something called indices, which is comprised of digital companies and billion-dollar companies in different countries, right? Because you got the GERD or the GERD 30, which is the German 30 billion-dollar companies. Then you have US 30, which is the top 30 billion-dollar companies in the United States. Then you have the NAS 100. And I'm not going to go through every indice, but you have these different types of pairs or different types of indices. And then you have something called the futures, right? A future is the actual value of the dollar, okay? And it's called the DXY. And we're going to talk about that. So if you're trading any United States dollar pair, any USD currency paired with another country, you definitely want to pay attention to DXY. Okay, you definitely want to pay attention to DXY because it's going to tell you the strength of your money. And for the past several months, the United States dollar haven't even been worth 100 pennies, right? And so, you want to know that if you're a trader, you want to know the strength of your dollar, your currency. And right now, there's even been a shortage of coinage or coins at stores, just local stores. There's a shortage on coins. Okay, and that's just because of our spending habits. Many of us are not using physical cash or money. We really, it's definitely a big wealth transfer, and it's super important for you guys to listen to what I'm about to say right now. Pay close attention, please. Okay, because there's going to be some things coming down the pipeline that I'm not even going to be ready for. And so we definitely need to have a good understanding of what's going on with our economy. It's bigger than COVID. It's bigger than a recession. There's a lot of things that's about to come down the pipeline, and if you don't understand about this wealth transfer, you're going to be in trouble. Okay. So this Forex factory is just a fraction of what you can use as a tool to help you to understand what's going on in the countries, plural, right? Because if you're not aware, and many people don't watch the news, and I'm not a big news watcher because it's a lot of fake news and all that stuff, but I'm not about to be political and say I'm for Trump or against Trump. Look, God has everybody in place for a reason. Nobody has power without him knowing and him giving it. Okay. No matter how evil or good people think they are, God has ordained everything. Okay. We just got to be prayed up and watch and pray, right? This forexfactory.com is just a tool that, they created to give us an idea of what's going on when it comes to currency. Now, this might be more important than marking up your charts. Okay, can you guys mute your lines, please? I know what I could do. Hold on one second. I got you. Mute everybody. Then I'll just. All right. Basically, this might be one of the biggest tools that you guys would want to use in your trading career. And I remember just starting to trade. I was like, man, I'm gonna trade the news. I'm a proficient trader. I don't care about that, right? Until I lost like $7,000 because of a news move. News happened and I lost 7 grand live. This is not demo. I'm talking about real life trading, and this I'm being transparent with you. Okay, and of course I got that back 500 times over, but I was ignorant to the fact people were one of my mentors was like, listen, you need to pay attention to the news because politicians the House, anybody that's in the White House, any type of political leader in different countries, prime ministers, secretary of state, all of that, when they get up and they're having these meetings, listen, if you're trading during that time, your account can be, not all the time, but it can be affected. And I'm passionate about that because I've been a victim, right? I'm a victor, but due to my ignorance, no, I was just stupid. Because it's one thing to be stupid, it's one thing to be ignorant. Ignorant is when you don't know, but stupidity and foolishness is when you know. A fool do not plan for tomorrow. Listen, he don't plan for tomorrow. So listen, you want to make sure you pay attention to this website right here, forexfactory.com. It's another one, FX Street. There's different Bloomberg. There's an app for Bloomberg. He has his own. He's one of the wealthiest men in the United States. But Bloomberg TV, Bloomberg app, right? He puts out different news clippings and articles about political climates and so on and so forth. But these people that are in positions, they have influence over our money. So while everybody sleep, they're making decisions about your life, our lives, when it comes to the value of our monies. Okay. Now, um, like I said, we don't worship money. We understand it. We know that it's energy. It's called currency because it's like water. It flows out and it flows in. It goes out and comes in. Okay. Don't stress over a dollar. If you lose a dollar, whoop de doo, right? You want to be a good lesson learner. I don't want to say you want to be a good loser, but you want to be a good lesson learner. So if you learn your lesson, you learn from it, right? You take the lesson, you know, don't be emotional. If you lose a trade, because you're going to lose some trades, you don't revenge trade. Write that down. If you lose a trade, don't get back into the market and say, "Oh, I lost this trade. Let me win my money back." Oh, I see that the market is going up now, so let me get in for a buy. Oh, I see the market is going for a sale. Let me get in for a sale, even though I was in a buy. Right? Have a plan, trade your plan, and plan your trade. Now, this forex market has this forexfactory.com. It's a free site. You don't have to pay for this, so you don't have to worry about that. But when you go to forexfactory.com, this is my own account. I go to this little funnel looking thing right here. It's a filter, and I click on it. And what I do is I like to check on the boxes of the folders that's pertaining to the news. This first gray folder is non-economic. I don't care about that, right? Because economic news affects the strength of currency pairs, okay? Or the strength of currencies or the strength of the fiat for that currency. I don't want to know about that, right? Then we have yellow, which is low impact expected. You could look at that, but it's not as prominent for for trading, right? You could keep all of the boxes checked, but I'm mainly focused on um, the orange folder, which is medium impact expected. And then you have this red folder. That's really the number one folder you want to pay attention to. High impact expected. Okay. This folder right here can make you a lot of money or it can take a lot of money, cause you to lose a lot of money. Now, if you're brand new to trading, I advise you to not trade during news. Do not trade news. Okay. Until you have a good understanding, a good foundation of news in trading, don't trade it. This is the beginning of the foundation. We want a strong foundation, understand that the news can definitely affect your trading. Okay. Please remember this site, forexfactory.com. Now, I usually use the orange and the red. The orange is kind of like a precursor before the high impact, right? So now look at this. It's amazing how you have four, 5 orange folders in a row. Then we have 3 red folders, but they're typically USD, Euro, and then AUD, which is the Australian dollar. Now, they typically all correlate. Okay. Um, the next, well, I think Charity already put in the study group. There's a chart that have correlating pairs that move in the same direction and pairs that move in the opposite direction. Okay, so save those pictures and stuff to your phone, print them out, so you know what pairs move in the same direction and what pairs move in the opposite direction. That's going to help you also understand when you're looking at the news. All right. So EU and GU typically moves in the same direction. AU, the Australian dollar and the United States dollar move in the same direction as NZD USD. EU and AU typically moves in the same direction, and it's not odd that we have news right during the same times, right, or in those same days, right. Look, Monday, Tuesday, Wednesday, it's all USD, EU, AUD news, right? We don't even see anything else until Thursday. All right, then that's when the market starts to kind of turn around and right. So this is what's important. Um, Looking at these folders, and then if you don't know what these news topics or headings are, there's a folder that says detail that will explain to you what this news is about. Okay, and sometimes it'll fake you out because they might say that it's bad for currency or it's good for currency, and sometimes if they say it's good for currency, it might cause the currency to go the opposite direction that you think. So it's still good to have market analysis and proper risk management, right? Because sometimes people be like, oh well, I know the news gonna be real good, so let me stack up on my lot sizes, or let me stack up on my contracts, and then your account get blowed. Okay, I'm speaking from experience. I know, right? Just starting out trading, I didn't know what I was doing, and I wanted to make the big money because I knew that it was possible because I've seen people do it. But what really helped me to become a consistently profitable trader is a plan. You have to have a plan. And if you don't have a trading plan, message me on Telegram. I'll give you my personal plan that I use. You can customize it to your balance. Start with $50, $100 to however much you're able to afford. And you can it'll customize and calculate the lot sizes that you're supposed to trade with. And you can customize the percentage every single day. So depending on how much you want to make for that particular day, you can change that from 1% to however much percent you're looking to make on that principle. Okay, that's super important. A trading plan and understanding news. All right, before you even look at a chart, you want to have a plan. So before we look at a chart, we come to Forex Factory. We say, okay, 8:30 Monday. Now I typically start my trading sessions at 7 o'clock Eastern Standard Time. You can Google Forex market hours, and it's going to tell you the most ample times to trade. If you don't know when to trade, I have people message me all day. When's the best time to trade? How do you get all this money? How you catch all these pips? When do you trade them? It just really depends on your schedule. If you're a night worker, you got to sleep during the daytime. You can get up for an hour or two, put your trades in, go back to sleep. Get up for 5 or 10 minutes, put your trades in, go back to sleep. Right? You don't have to be on the charts all day long. Okay. I'm a full-time trader, so I can do that. But the whole purpose of making money and becoming financially wealthy is to have financial freedom and time freedom. But you have to have a plan. Every wealthy person has some type of plan. They have goals, but I'm gonna tell you something. If you don't write your goals down, that's just hallucination. A dream that's not written down is hallucination. You had a dream about something, but you really can't remember everything. But when you start writing it down, you can believe, your bottom dollar that you'll begin to remember the things that took place. You can recall those things. You're writing it down, things will start coming to you. But when you write down your plan, you can go back to your plan, right? And affirmations are super important, right? So knowing your trading plan, having a trading plan written down, not just in your mind, but actually having a trading plan in a journal. That's super important. Okay. So 8:30 a.m. Monday, this is when the news is supposed to take place. Core durable goods orders. I don't know what that means, so I go to the details folder and it's going to explain to me what it means. Right? Measures change in the total value of new purchases orders placed with manufacturers for durable goods, excluding transportation items. I don't care about that. Right? But if you want to dig deeper, you can go to the Census Bureau and all that stuff and figure out. You can dig deeper. And when you read, reading is fundamental. you could definitely learn more than just, perusing over it. But my main focus, because it even tells you here, it says why traders care. If you're on this call, you're a trader. So you probably care. You probably should care about this news event taking place. All right. So it says it's a leading indicator of production. Rising purchases or purchase orders signal that manufacturers will increase activity as they work to fill the orders. All right, this is not a question problem. I know y'all hated question problems. Like if y'all like me, you had them long question problems and you had to read through it and figure out what the answer is. This is not that, right? But it's just telling you that why you should care about this. Now, we know that in trading, I just told you guys, when you're looking at the candlesticks going up, that means that that's a rise in price. That means that whatever pair you're trading is increasing. So here we got a key word, rising purchase. I know it seems simple, and I'm not trying to talk to people, and sound condescending, but it's really Barney style. Like if you can read, I'm telling you, you could be successful. Like seriously, you don't even really got to know math like that. Just just to add and subtract and multiply, basically. Um, but this forex factory is a super important key to have and tool to have to understand what's going on with the market. So when the markets open up, then I'm saying, okay, the United States dollar is supposed to be strong, right? Because we have a strong production that's happening, right? It's a leading indicator of production, rising purchase orders. So that means that the United States dollar, right, is going to have durable goods, and the increase of production is going to be there, right? But this is just the news that's coming out to let the people that are producing products to know and understand that the orders are going to be increasing. Okay, it could be because people are getting jobs. It could be manufacturers or new buildings are being built. We don't know what the depths are unless you go to the Census Bureau and look at all of that. But all I needed to know was the production is going to be rising, right? Purchase orders are going to be rising. It's going to be an increase in activity as they work to fill the orders. Okay. So that means that's going to be a high demand. So if I'm trading Euro USD, it's a possibility that the Euro USD might drop. Okay. It's a possibility. Now I heard word and I saw that the dollar is supposed to also decrease um, due to our economy. But those are just little clues that we hear. And sometimes, Donald Trump gets up and he has these speeches and he say little weird stuff. But I've been on the charts and had my Facebook up or my YouTube up or whatever live and heard him say certain things and it caused the market to spike. Okay. So regardless of how smart or how dumb you think Donald Trump is, listen, he's a billionaire for a reason, right? So him and the Speaker of the House, okay, and other people that you'll see, it'll actually say their names. It'll tell you like the Federal Reserve Speaker or CEO or whatever president. It's going to show you what those news topics are about. So you want to pay attention to those times, those dates, and what currency could be affected. All right. And once you see that, then you go back to your chart, and then you do your markup, you do your market analysis. All right. So let me go back. How we doing, Charity? I know I've been talking about Forex Factory, but I'm strong about understanding what news does to your money.
Yeah, I mean you're doing great. I'm listening to everything. I see a lot of people agreeing with what you're saying in the chat. I think I know a lot of people in that survey were talking about they want to understand entries and some of the tools.
Right. Right. Okay. Okay, yeah, we could do that. Yeah, I looked at the survey and the polls and stuff, but I just want people to know before you even enter a trade, it's good to pay attention to the news. I know that might seem advanced, but it's very important. But I got you. I got you. We're going to look at how to enter a trade. Super simple setups. So that way you guys can start making some monies. So so yeah, I know that it might be over some people's heads, but I pray that you guys understand that. Just Forex Factory, and just know like, okay, this time 7 o'clock, there's news about the United States dollar. Cool. I'm either going to trade during that time or not trade during that time. Okay. And if you trade during that time, pay attention to what happens during that time. Do you get a spike in price? Did the price go up or did it go down? Okay. And that will affect your entry. Okay. That will and it can affect your entry. So cool. I see the twos coming in. I appreciate you guys. Appreciate you guys. All right. Let's see. Just waiting for it to load up. Awesome. Thank you guys for your patience too. Appreciate it. Come on, come on, come on. All right. So the first thing I see on the poll, it says Trading View Tools MA indicators. Now, um, Charity, do you guys want? Well, not just Charity, but everybody as a whole. When it comes to MAs and indicators, there's thousands of MAs and indicators. We can go over the 20 pip and dip strategy, entries and exits. I talked a little bit about correlating pairs. Um, you guys can Google Forex correlating pairs, and it's going to give you like different pictures that show you when the pairs are going in the same direction. And I can pull it up too and show you guys. But if you want to, you can take a picture of it. While my chart is loading, it's still loading up. I'm gonna go ahead and go to. I'm gonna show you guys uh, the picture of the
And while you're
correlating
doing that,
pairs.
I'm watching the chat,
Chat.
and I see
Mm-hmm.
some people are saying entry, some people are saying 20 pip and dip strategy.
Mm-hmm. Right.
Yeah,
Okay.
like yeah.
Okay. Awesome. 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 Yeah. I'm just waiting for this trading view to load up. I had to tell my wife to. I'm like, you on the Wi-Fi? Cause it's a. So hopefully it well, we got high speed internet too, so I don't know why it's loading so slow. I think I'm giving y'all too much sauce, man. They like, nah, shut him down. Shut him down. All right, so let me all right. So these are correlating pairs. If you want to grab your phone and take a picture, um, these are pairs that correlate, meaning that they go in the same direction or they go in the opposite direction. And these green arrows show you that they're going in the same direction. Okay. And these show you that they're going in the opposite direction. Well, these go in the same direction going down, these go in the same direction going up. Okay. And then these are showing you that they go in the opposite direction. Right. And this kind of give you this is a legend or like a key that show you pair is strengthening, pair is strengthening, pair is moving up strongly. You have the two pair is weakening, and then pair is moving down strongly. Okay. So go ahead and take a picture of that. And I believe Charity has it in the study group as well. You just go to files and go to photos, and you'll be able to see it. Okay. Another thing I want you guys, I mentioned is reversal stick patterns. Okay. Take a picture of this. This is on Forex Factory too, right? So powerful reversal candlestick patterns, right? You have your bullish and you have your bearish reversal stick patterns. So you're looking for these patterns at the top or the bottom of a trend. And I'm going to show you what to look for. You're looking for these at the top or the bottom of a trend, right? Sometimes you can see these bullish reversal stick patterns um, at the top of a trend, and sometimes it's a continuation, and we'll talk about that, and vice versa. Sometimes you'll see a bearish at the bottom of a trend, and sometimes it's a pullback, and then you see a continuation, right? Those are called the last buy to sell or the last sell to buy candles. They usually give you like a little clue before the market does something major. And I'm going to show you guys that. Now, that 20 pip and dip strategy is super powerful. It's only one EMA, to be honest with you. If you don't have access to the 20 pip and dip strategy, yeah, you can go to the 20 pip and dips .com and register for it. But all you really need is the 50 moving average. And you can use the wrinkle arrows on TradingView. And I'm going to show you how to get that so you guys can start trading right now. Okay. You guys can start looking at this Monday. All right. So Euro USD. So GU is my baby. EU is my baby. They basically move in the same direction. One moves just a little faster than the other. Sometimes it kind of gives you a clue as to what the market is going to do before it does it. Before it do it. Um, However, sometimes GU can get off track a little bit because Great Britain is going through, that major change with the whole Brexit thing with the UK and Europe. So sometimes they get a little rebellious and drive the currency strength up or down, depending on if they're going on strike and not spending the pound, and all of that stuff can affect the strength of the currency. Okay, and you guys will get used to that. But the 20 pip and dip strategy is super powerful. I'll touch on that, and then we'll try to look at some other things um, before our time. All right, so I typically like to add the 50 EMA and I make it blue. I call it the water. And for whatever reason, MAs, moving averages, somebody created this mathematically and they said, based on 50 days of movement, whether up or down, you're going to have some slight deviation in this blue line. And if you're using it on a smaller time frame, you're still going to get some movement on a smaller time frame. Um, and you actually might have more movement on a smaller time frame than on a larger time frame, because you have to realize that on the 1 hour time frame, it takes 24 1 hour candles, right, to make up one daily candle. And then on the 4 hour time frame, right, it takes 6 4 hour candles to make up one daily candle. Okay, though that's significant to the 20 pip and dip strategy, because we look at the daily, we look at the 4 hour, and we look at the 1 hour 4 hour analysis. Okay. So let me can I hide this? See if I can hide this. This is another indicator that I use called the Traders Dynamic Index. That's a whole lot of indicators in one. It does a lot. But to keep it plain and simple, here we have the 50 moving average. Okay. Now, to put this on your chart, you just click on this FX, this function key, or this Forex button. It says indicators and strategies. So you're going to click on that. All right. And then you just type in here moving average. And then you're going to see moving average exponential. Make sure it's moving average exponential. The exponential moving average moves a little bit tighter or closer to the candlesticks versus just a regular moving average, or a weighted moving average gives you a little bit more play. But this exponential moving average moves a little bit tighter to the bottom and the tops of the candlesticks, and it acts as support and resistance. Now, if you're intraday, make sure you study in and out support and resistance, market structure, and price action. It's going to help you to understand what you're looking at with any type of strategy. Okay, any type of strategy. All right. So there is another indicator that I like to use with the 50 moving average, and it's called a Renko indicator, and it tells you when to buy and when to sell. Okay. Now, the Renko indicator. Now there are such things called Renko candles. The Renko candlesticks is based off of pure price, not time. Okay. Um, and that would definitely be another discussion for another day because it's a little bit more technical. But it's basically based on market structure, right? And it's really not comprised on time because I've seen one Renko candle complete in a day, right? Looking at the 1 hour time frame. So it's sharper patterns and stuff like that. But there is something called Renko alerts. Okay. The Renko alerts, it kind of tells you where the market is going to reverse based on calculations that whoever made it said, hey, the market is going to reverse here. So pay attention. Okay. Now, all of the indicators, it don't matter what indicator you use, no indicator, no strategy is 100%. The purpose of using a strategy is to help you to be consistently profitable and to win more than you lose using a system. Using a systematic strategy is going to help you to be more profitable consistently. Okay. So looking for the wrinkle, I might have it already saved. That's the reason why I can't find it. Um, yep, I already have it. So you type in Renko, Renko, and you're looking for the one that says reversal alert. And the name, the person who put it up here is Fritz Harbor. Okay, it has not over 952 downloads or whatever. But this is the one that you want. I have it starred as a favorite. So if I ever go to a new chart, when you start the indicator and you go to indicators and strategies, it's going to show you your favorite indicators to use. So you won't have to search 5 million indicators. Okay, so I'm gonna put that on the chart. All right. Now, I like the Renko reversal alert is pretty cool because it's going to show you. It's not showing up. All right, there you go. It just took a little time. It's going to show you when to buy and when to sell, and it's going to show you an arrow. It's going to show you an arrow when to buy and when to sell. Now, you're not only using that arrow to buy and sell, you have to use price action and market structure. Okay. Now, this 20 pivot dip strategy, you're using this 50 moving average as support and resistance and the trend line. And when you understand that the trend lines are um, also support and resistance. It's just a diagonal support and resistance line. Okay. So if the candlesticks, this is price, right? Red candlesticks open at the bottom. Open at the top, close at the bottom. Bullish candlesticks open at the bottom and close at the top because it's going up, right? Bulls horns point up. That's the way you can remember it. And bears, they claw, they swipe down. Okay. Right. So bears go down, bulls go up. Okay. And so it's very important to understand the opening and closing of a candle because it's indicative to the 20 pip dip strategy. Because along with doing your top down analysis, starting at the daily, the 4 hour, and the 1 hour, you're going to be putting supporting resistance lines based on market structure, the highest points and the lowest points. You need to know when a candlestick is breaking a support level and breaking a resistance level. And you also need to know when the candlesticks or price is breaking the 50 above and below, because that's going to show you how to get in and out of the market using the 20 pip and dip strategy. So let me show you really quick. Okay, with no indicators at all. Look how cool this is, okay? I like TradingView because you can back test, you can erase current history, current data, and go back in time and back test the theory, okay? So let's back test this a little bit, okay? let's back test this a little bit. All right. So looking at the market, let me get my replay tool up. Looking at the market, this is how you enter. This is how you enter the market using the 20 pip and dip strategy. All right. So we have our 50 moving average exponential, right? I call this, I make this color blue because I call it the water, right? This is like the water. And these candlesticks are, think about them being like sharks, right? Sharks can't jump out of the water, okay? They can jump out of the water, right? Um, right, we're sharks, right? We hungry, we got to eat. So this aqua line is like the water, and these candlesticks are like sharks. Above, when the candlesticks are above the water, right, you're looking for buy opportunities, right? You're looking to go up, you're looking for buy opportunities. Now, when the candlesticks close below, okay, in this case right here, this one candlestick closed below the 50, you're looking for sell opportunities. This is a straight uptrend. The market is moving up. You have higher highs and you have higher lows. Um, you're looking for buy opportunities. Now, on the flip side, when you have a downtrend and the candlestick crosses below the 50, you're looking for sale opportunities, right? So this red candle, it opened here and it closed here. So we're looking for a sale opportunity for 20 pips. That's why it's called 20 pip and dip. You get your 20 pips and you get out. You get your 20 pips in the market and you get out of the market. 20 pips is a lot of money. Okay. Eventually, if you start with a smaller time frame, smaller account, it's going to build up, it's going to add up. So don't despise small beginnings. Okay. I know people that make a lot of money on 5 and 10 pips. But 20 pips, I think it's a very good um, pip amount for your plan. And eventually you'll learn how to swing trade and intraday trade where you're getting 50 and 100 plus pips. Okay. Now I created a strategy to help you maximize your pips when you're scalping in and out of the market. But this 20 pip and dip strategy is really good also. So here we have an uptrend. Okay. Now, even though we have a 50 moving average, you still want to use your trading common sense. Right. And if you don't have it yet, it's probably because you still need to learn basic support and resistance and market structure. Okay. Now, looking at this chart, I just drew a trend line. In order to draw a trend line, you use this tool to the left, right? It's the second one from the top. You click on the little arrow next to it, and it's going to say trend line. I got it starred because that's one of my favorite tools to use. So it gives me like a little shortcut tool box for all of the starred indicators that I use on a regular basis. Okay, so you don't have to keep going back here. You can just click on this. All right, but if you want to get the trend line tool, you click on this button, right? And you draw your trend line. In order for that trend line to be valid, it has to touch two places in a row, two or more places. The more touches, the stronger the actual trend. Okay. Now, two touches at the bottom, right? This is the bottom trend line. This is called the support trend line. And then if we have two touches at the top, then we have a resistance trend line. And if it draws, let's see. Okay. We have a touch here and a touch here. That's two touches, right? Two touches at the bottom, two touches at the top. That's all you need. Here it touched a little bit more, it broke here. But when you have two touches at the bottom and two touches at the top, and you put a trend line at the top and a trend line at the bottom, this is called a channel. This is called a channel. Think about a river channel, right? Sometimes channels split and they go in different paths, but this is the path of an uptrend. So this is a bullish trend, right? Because remember, bulls go up, bears go down, and we have two touches at the bottom, two touches at the top. This is a bullish trend, okay? Bullish channel. Now, I always correlate this to prayer, okay? A lot of times when you're praying sometimes it don't, your prayer is not answered. So you got to keep praying until something happens, right? That's what push stands for. Pray until something happens, okay? PUSH. In this case, like these candlesticks are like prayer. Keep hitting this zone or this area, and eventually it broke here. And you see this candle, it closed below this trend line. Now, this is a little bit more advanced, but with the 20 pip and dip strategy, you still want to have some trading eyes to see lower highs and lower lows, and that's going to indicate a trend change. All right, so this trend was going up, and for whatever reason, the integrity of this line was broken here. And once it broke and closed, that's an indication to me that the market is maybe getting ready to do something else, because it was going up and now it started moving sideways. Listen, the market only does two things: it goes up and it goes down. Okay. Some people say it does three with consolidation, but even in consolidation, it goes up and down. Okay. So you just want to pay attention to that. And you're saying, okay, well, I see something happen here. Pay attention. So you can set an alert here. And in order to set an alert, you can actually right click on that area and then hit this little button that says add alert. Okay. Click this little button that says add alert. Now, the reason why you're adding an alert, because you might be at work, you might be giving your babies a bath or walking the dog, whatever, and you don't want to miss the move. You can set the alert anywhere. You can set the alert on the 50. You can set an alert on the trend line. You can make array or put the trend line on the candle, or you can just click on the screen, right click on the screen, and just set an alert. And then this is what's going to happen. I can't do it right now because I'm in replay mode, but it's going to give you a dotted line, and you can actually set a reminder to your phone, your email. You put your email address in or your cell phone. It'll send you a notification to your phone. If you have the app on your phone, you can actually download TradingView to your phone, and it'll send you a notification saying, "Hey, Erica, buy here. Erica, sell here." And then you're gonna say, "Oh snap! I think it's a sell setup. Oh snap! It's a buy setup." Guess what? You're becoming the signal because you made your own signal, and then you can tell your team, "Hey, sell at 1.15622, right? Using the 20 pip and dip strategy, this is going to show you when to get in and when to get out of the market, right? But you still want to use your trading sense with trend lines being broken. And if you don't understand the trend lines just yet, just focus on the candlesticks breaking the 50. All right. So let me replay this because this move has already happened, right? So you see this happen in the market. You see a big red candlestick breaking the integrity of this 50 moving average. Okay. Now, when you see something like this, what you want to do is for entry, listen very closely. I'm about to show you right now how to get in. You want to mark this 1 hour candle. This is your candle of interest. It has to break and close underneath the 50, or it has to break and close above the 50 for that candle to be your candle of choice. Okay. This is the rules. Okay. The candlestick has to break above or below on the 1 hour. So let's do this because I want you guys to know these rules. Let's see. Okay, it's not letting me. All right. All right, here's the rules. 20 pip, right? So you're going to do your TDA on the daily, 4 hour, and then 1 hour time frame. You're going to do your top down analysis, right? Then the next thing you want to do is ID candle closing above or below 50 EMA. All right. And then 5 minute 5 minute entry. Let's just say 5 minute entry has to match closing candle on 1 hour. Oh, 1 hour time. 1 hour time frame. All right, so these are our rules. Okay. See if I can move this over a little bit. I'll just put it at the bottom right here. All right. So 20 pips in dip, TDA, daily, 4 hour, 1 hour. So top down analysis. So you want to find your support and resistance on your daily 4 hour, 1 hour. I call it a stoplight because my red lines are going to be on the daily. My yellow lines are going to be on the 4 hour, and then my green lines are going to be on the 1 hour time frame, just like a stoplight. So you have stop, slow down, and then go. Okay, so it's kind of like getting prepared to go to drive. Okay, then you're going to go down to the 5 minute time frame for your entry. You're going to mark the candle of choice on the 1 hour time frame, and then you're going to go to the 5 minute time frame and get in the market. But it has to match what this looks like. So if I go to the 5 minute time frame and there's no red candles below the 50, I'm not selling. So let me go down to the 5 minute. I marked it on the 1 hour. So now I'm going to the 5 minute time frame. Now the candle that I'm looking for has to be below the 50 moving average. Now, in this case, the candle that I marked is going to always be on the candle at the beginning of the time, the beginning of the hour. Okay. So that candle that I marked was at 8 o'clock in the morning. I typically like to look for my setups at 7 o'clock in the morning. This particular candle closed below the 50 at 8 o'clock. But the first candle that we see is at 8 o'clock. But you know, and I know that the hour is not over until 9 o'clock. That's a brand new hour. So look what we have here. This from this candle to here is 8:55. I'm not getting into a sell until the candlestick on the 1 hour is closed. So this whole section from this line, this vertical line to here, is actually the 1 hour that we marked on the 1 hour time frame. We're not getting into this trade because the next candle, even though it's below the 50, is bullish. It's green. 9 o'clock candle was bullish. And if we go back to the 1 hour, the brand new candle that we see, this opened up at 9 o'clock. Brand new 1 hour candle. This candle was not over yet, right? At 9 o'clock. This candle was not over until the next 10 o'clock candle pop up. So now we see that this 8 o'clock candle was not the ideal candle. So now we need to move this line to this candle because now we see that the market went up. We're on the uptrend. This bullish candle was above the 50. We wait till this candle close. Now, if this candle close, and then we go back to the 5 minute time frame, now, guess what? We need to look for a candle above the 50, just like the candlestick closed above the 50 at 9 o'clock on the 1 hour time frame. But remember, it's going to take an hour for this to happen. So look, right here, now we're starting to see at 9:45 the candlestick closing above the 50. We're not in a buy, even though it said the Renko is telling us to buy. You can get in there. Once you understand market structure and trend breaking and all that stuff, then it's going to be a little bit riskier. But looking at this strategy, we're not getting into this trade until the candlestick close above the 50 on the 5 minute time frame. Now we marked the ideal candlestick on the 1 hour time frame, but we still have to wait till that candlestick close completely. So at 9:40, we're not in this trade. At 9:45, we're not in this trade because we need this candle to close first completely above the 50. And that's at 9:55. Well, 10 o'clock. All right. So that's the candlestick that we're watching. That's the ideal candle that we're marking. And then once that candlestick closes above or below the 50, then we get in on the next candle. All right. So now we see that this candlestick closed above. Now we need to see, okay, what happened at the opening of the next candle. All right. So let's go to the 5 minute time frame. And we see, let me see, where's our 10 o'clock candle? All right. Our 10 o'clock candle is here. Our 10 o'clock candle was bearish. So why would you get in if it's selling? You're looking for a buy. Why would you get in for a buy when this candle was red? So I'm waiting until I see bullish momentum. This candle right here is bullish candle right here is 1015 is bullish. Um, so once you see that bullish confirmation, I would wait until the next candle. And lo and behold, the next candle it took place at 1020 and the wrinkle says buy. So now I see this candle at 1015 or 1020 is above the 50. I got a wrinkle alert that told me to buy. The candlestick that opened up, the 10 o'clock candlestick on the 1 hour is above the 50. So I'm getting in for a buy. All right. So now that you see this, awesome, Erica. She said, thanks for the clarity to understand the 1 hour and 5 minute relation. Yes, yes, yes. That's what I want to see. All right. All right. So now we have this 1020 candle. It's above the 50, just like the 1 hour candle was above the 50. So those are your two confirmations. Well, you got three. You got the candlestick closed above the 50 here. You drop down to the 5 minute. The next candle that opened up, that 10 o'clock candle was above the 50. That's the second confirmation. The third confirmation is that Renko says buy and everything is lining up. Everything is lining up the way it's supposed to. And if you look back in time, you see that it's making an uptrend. You have a low, you have a higher low, you have a high, and then you have a higher high. We'll be in this trade. Now, if you're afraid and you're scared, you still don't know, you can always go to the previous high and get it, mark it, make an alert, and say, okay, when price comes to this area, then I'll get in for a buy. But if you're doing market execution, which meaning I'm going to buy immediately, you're going to open up your MT4 and you want to go to this symbol, go to this pair, and then you're going to click on the buy button, right? Just instant market execution. So if you're marking up your charts on TradingView, you're going to click on this button right here. Okay. It says long position. Okay. It's like the last one before the icon symbol. Click on this button and the arrow. If you're buying, you're looking for the long position. To buy is long and to sell is short. To go long is to buy and to go short is to sell. So if I'm buying, I'm looking for the long position. And this is how you enter the market. This is the candlestick that I'm getting in on. So I'm going to press, I'm going to click above where that candle closed, right? Because remember, the bullish candles closed at the top. Okay. Now, this long position is going to give you all the information you need to put in your phone. Or if you're trading on your MT4 computer, this is going to give you all the information, the coordinates to put into your phone. This is how you become the signal. Now, you everything lined up, and now you got a team of people, and you're saying, you know what? I believe that Euro is going to continue buying for 20 pips. Okay, so you adjust the amount of pips by taking the first dot at the top because it's bullish. So we got the long position tool. So we click on the dot at the top. It's going to help you. It's going to allow you to adjust the amount of pips, the target number that you're looking to target, right? To target. You're going to adjust this to 20 pips. I usually do 21 to cover the spread, which is the amount of money that you got to pay the broker to exchange your money in the market. Okay. That's the difference between the ask price and bid price. And we'll talk about that later. But I usually do 21 to get my 20 pips. Right. So, and then I'm going to adjust my stop loss 10 pips. Now, the reason why I'm doing 10 and 20 is because I want a 1-to-2 ratio trade. Okay. That's a 1-to-2 ratio trade. That means I'm going to earn twice as much than what I'm going to risk in the market. Now, I told you, you don't want to be a good loser. You want to be a good learner. You want to risk half the amount that you're looking to make. Now, you can do a 1-to-1 ratio when you're trading 20 pips for 20 pips. You're looking to risk 20 pips to make 20 pips. Okay. You can do that. Just make sure your analysis is on point. because I don't. If I'm trading $10 a pip and I'm looking for 20 pips, right? 10 times 20 is what? Somebody type that in the chat. I want to make sure y'all still following me and y'all ain't going to sleep on me. $200. Am I going to risk $200 to make $200? You can, but I'd rather risk $100 to make $200. That's just the way I do it. You don't have to. You can do 1 to 2. You can do 1 to 3. You can do 1 to 4. You can do 2 to 2. You can do 3 to 3. That'd be kind of foolish, but you still want to have an exit plan. So if the market goes against me, I know that I'm only risking $100 depending on my account size. And you have to know the amount of money that you're risking due to your balance. That's why I said it's good to have a trading plan, because it's going to tell you how much money you should be risking in the market with your balance, whether it's $50 or 5,000 or $50,000. You need to know how much money you can risk before you get into a trade. Okay. Um, all right. So 10 pip stop loss, 20 pip take profit. Now, if I go now, this take profit got smashed. Okay, it got smashed. I ain't even get a chance to show you the whole shebang, but I can go back again. All right, so watch this. All right, so my confirmation was on the 1 hour. The first confirmation showed me that the candlestick closed above the 50. Then I dropped back down to the 5 minute, and I saw that the candlesticks were above the 50. Guess what? I'm looking for an entry. I get my long position tool. I put my long position tool on a candle that's above the 50, and it has the wrinkle that says buy on it. So I'm either going to win that trade or I'm going to lose that trade. But according to the 20 pip and dip strategy, all of my confluences line up. So I'm in there for 20 pips. That's it. You get your 20 pips and dip. That's it. Now, I'm gonna tell you a little secret. You could have made 40 pips. All right. So if your goal was $20 and you're trading $1 a pip, and let's say, yeah, your goal was $20. Let's say you did $1 a pip. Well, technically, if you go 20 pips, you're going to make $20 with one trade. But if you stack those trades and put two $1 lot sizes in, that's going to give you $40. Guess what? That's 40 pips, even though it went 20 pips. So that same 20 pips really generated you 40. Okay. Now, you can also cut your lot sizes in half. Let's say that you traded 50 cents and you went for 10 pips. And maybe your lot size, your trading plan says that you're allowed to trade up to $1 in the market. Well, you can cut that in half and trade 50 cents for two trades and go for 10 pips. So you still got 20 pips total with two trades. That still gave you $20, but you just didn't put in a full $1 lot size. So it's more than one way to get 20 pips. All right. But this is your goal here. And if 20 pips is my goal for my entry, then you can do a couple of things. You can stack your trades. You can do a twin trade, which that's putting two trades in for a larger pip, well, a smaller pip size, or you can do twin trades for that 20 pips, which really multiplies to 40. All right, but a trading plan is going to help you to break it down. All right, it's going to break it down. All right, so I'm into this trade. I marked this candle above the 50 moving average, and then I hit play, and everything lined up. All right, I'm in profit. Whoa, whoa. So I'm in profit, but then I get a wrinkle that says sell. Do not get scared when you see a wrinkle that says the opposite of what you're in. Let your trade play out. Let your trade play out. If you set your stop loss and your take profit, let it go. Set it and forget it. Literally. Don't change your stop loss. Don't change your take profit. Let it play out. Right? Because you're going to be upset if you change something and the market goes in your favor and you cut yourself short. You sell yourself short. You don't want to do that. Okay? All right. So the market is going. So So 5, 10, 15, 20, 25, 30, 35, all right, 40. So this candlestick right here wicked and it hit my take profit. All right, hit my take profit. After it hit my take profit, then I got a brand new bearish candle. It says sell. I'm out of this trade anyway. I should be out of this trade. Once you get your pips, once you get your money, are you satisfied with the amount of money that you're up? Get out of the market. Now, one thing I can tell you that you can do is you can take profit early. There's no penalty in taking your money early. It's better to be what they say when people call you a chicken. Look, my mom used to encourage me. She's like, look, I know you in the streets doing this. Look, if you feel like you scared, somebody call you a chicken, it's better for you to be a live chicken than a dead duck. Like that's what my mom, that's what she used to tell me. So it's better for me to take my profit than to lose, you know what I'm saying, my progress. So if you're up maybe $4 or $5 and you just like, you know what, that looks good. I'm tired. I want to close my trade, then take profit and get out the market. But don't change or adjust your parameters unless you're just closing a trade. Right now, you can't close early if you're losing and you don't want to lose 10 pips. Maybe you want to lose 5. Just close it. But there's no penalty in taking and securing the bag early. Okay. So did that make sense? I know a lot of people. I see y'all making jokes in the chat. Like I need to rewatch this. Let me look at these chat comments. Yes, use proper risk management. Super important. Awesome, Charity. She says someone wanted to understand that long and short tool. Awesome. It's the same way going the opposite direction. If you're selling, you just use the short tool. Awesome. All right. So I see I got 22 messages that just popped up. What was the 50 you were referring to? The 50 was the 50 exponential moving average. Period. That's the EMA. It's the blue line. Yes, it's the blue line that we're using. All right. I thought I saw something else. So basically, I need to know my overall percent I can lose and break it down into smaller components. You can. You don't have to trade the whole big lot size. If your trading plan tells you in order for you to make $500, you need to use a larger lot size, and you feel that you're not comfortable with using that amount, then you want to stay on that particular time frame until you feel comfortable. You want to stay on that particular day or that trade block until you feel comfortable, until you hit the amount of money that you're supposed to hit for the next. And I'll pull up my trading plan so you guys can see what it looks like. But that's a good question. That's a great question. You can definitely break down your lot sizes, and you can trade multiple times a day. Just know what times that you're looking to trade, and get out of the market at a certain time. Like, look, I'm only trading between 7 and 10:30, the latest 11 o'clock. Everybody knows. Every student that I have knows that I'm trading between 7 and 10:30, 11 o'clock at the max. But the highly probable trades are taking place for New York session between 8 o'clock and 11 o'clock because the London session and the New York session overlaps. And when you Google Forex market hours, it's going to give you a chart to tell you what each market hour has. There's also an app called FX Hours that you can download. It's free. It tells you the hours to trade. And if you click on the map for the country, it'll tell you all the pairs that you should be trading during those times. And it's pretty cool. And it also includes Forex Factory in that app, so you know what's going on with the news. But it's called FX Hours. Um, you can do 0.1. Yep. Let's see.
Clyde,
It
I
accounts
think that
for
you
the
had
average.
that they could reach you on Telegram, so they were wondering how do they do that. Guys, Clyde is actually inside of the study group. So if you go to the members inside of the study group, you can send him a private message if that's what you're trying to do.
Yes, absolutely. But I think it's CJ_Pips, or you can just type in Clyde Fisher. Sometimes it won't pop up if I'm not your friend on the Telegram, or if I'm not in your contacts. But CJ_Pips, I believe, will bring me up, and you'll see a picture of me with a little the Tradera I Am Legend logo behind my head. Um, can you please go over once more? Yeah, I
They
can.
want you to go over the
Do I have
hour,
time to do that?
how to mark your hour candle. They want you to review again how do you mark your hour candle.
Okay. It seems the wrinkle alert hit its max order. Does that mean it won't populate on my trading view? I'm not understanding what you're saying. If you have a free version of TradingView, you can only add three indicators, but this is only two. You only have you only have the 50 moving average and the wrinkle alert. That's all you need is two indicators for the 20 pip per dip strategy, unless you have the actual the setup from Tradera, which gives you a lot. It gives you a lot more confluences, and I can go over that maybe another time. Break down every indicator that they have up there. I think that means you have reached. Yeah, that's the amount. You can only do three, and I can go over it one more time. Vertical line in the toolbar. Yep. And this time when I do it, I'm going to show you exactly what I do before I get into a trade. Can you please go over once more? What are we looking for between the 1 hour and 5 minute? What exactly know when? Did you just get on the Did you just get on the call? Some people might just be plugging in. Do it on a 1 hour. You mark it and look for the correlation. Okay. Good. 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 Does he sound low to you? Do I sound low? Can you guys hear me well?
I think it all depends on the device because sometimes you're very low to me and I have to go get headphones. But I
Okay.
can hear you. It's just some guys, if you need to go get headphones, that's what you have to do, okay? Because a lot of people are saying they can hear you fine.
Okay. Melissa can hear you. If you're late, sorry, be on time. Yeah, a lot of people saying they can hear me. Probably depending on the internet. Yep, following you like a strategy. Yeah, I have several. I have all kind of strategies for people with different trading styles. Um, Outside of Tradera, but really, this 20 pip a dip strategy is you can use it on. You can use it for intraday trading. You can use it for swing trading too. You just use different time frames to for your verification for entries. New York session Monday through Thursday, posted in the study group. Yes, that's the time that I trade. Monday through Thursday, 7 o'clock. If I'm a little late, 15 minutes, 30 minutes at the max. I got two sons, so I usually try to get them fed in the morning before I get on with you guys. I don't want to neglect my babies. So I got to make sure that they're, clean and fed before I get on. So if at the latest is 7:30. Um, but I tell people too, have your laptops or your desktops when you get on my sessions because I'm a very interactive person. I will have you do a top-down analysis, right, on a dime. But people say they love it. I'm a little strict, a little hard. Some people say, but once you get the TDAs, you can trade almost anything. Thank you, Miss Patricia. I appreciate it. He is not a signal like lit. Nope. Sometimes I give trades on my live sessions if I see a good one. But my whole purpose is to teach you how to fish, right? Is to teach you how to trade without me, without lit, without the signals. I want you to be the signal. That's what sets me apart from everybody else. I want you to know how to do it. And a lot of times I have you guys doing it live. So we're not disrespectful. If so don't feel embarrassed or anything. If I ask you to share your screen, now listen. There's been times where I'm like, all right, come back tomorrow when you're ready. I remove people from the Telegram because I want people to. I mean, not the Telegram, the Zooms, because I want people to not just be ear hustling, trying to see what I'm doing, but I want you guys to actually be able to trade. Come with your laptop, yes. No cursing, right? Charity, she put out the rules in the beginning, for our Zoom sessions and our telegrams. Yes, Sister Patricia, you want to teach your family, right? All right, did I miss any questions? and I can go over it really quick. I'll go over it really quick, and then we can wrap it up. I know I didn't answer every question. It was kind of lengthy going over the news and the breakdown of the 20 pip and dip strategy. But this really is a cool strategy to use that Coach Max came out with. Man, I rock with Coach Max, man. I love her. She's definitely a blessing. She taught me fibs. I've been trading way longer than Max, but she took that Fibonacci trading to a whole nother level. And one day we can go over that as well. But she came up with this 20 pip and dip strategy to help people that's not familiar with fibs. That's not really good with support and resistance. But she breaks down the TDA and the 20 pip and dip strategy so you can be proficient. And it doesn't matter how old you are, how young you are, you know, when you see that candlestick break above or below that 50, you looking for a setup. Okay. Now I do have I did kind of create a strategy to help you to scalp, to make 5 and 10 pips to get in and out of the market, in conjunction to the 50 pip and dip, the 20 pip and dip strategy. Um, and we'll talk about that on. We're going to talk about that Monday. So if you guys get on the session Monday, you're going to see that. All right. So this is what I do. I get on the daily, and I'm going to go through this kind of briefly because it's 7:59. It's almost 8 o'clock. I'm gonna go through this rather briefly. So pay close attention. All right. So the first thing that I do is I go to the daily time frame. I go to the daily time frame and I put my line chart on. So you click on the candlesticks, right? Mine is I got it saved as a favorite. But you click on the candlesticks and then you choose the line chart. Okay, it's going to change it to the line chart. Now this line chart is going to show you only price action of the opening and closing of every candle. It's going to show you the highs and the lows of the opening and closing of the candles. It's not going to show you the wicks like the candlesticks. The candlesticks are going to show you the shadow of the candle or the tail of the candle or the wick of the candle, whatever you want to call it. But you're not going to see that on the line chart. So for TDA, this is what I do before I get into a trade. I mark up my chart like this, kind of like Coach Mac. She does the most recent high and the most recent low. I like to also mark where price currently is, because sometimes when you mark where price currently is, it could be at a support or it could be at a resistance, and it might have a hard time with breaking a particular zone because it's at a support or resistance zone. So you marking up these zones to see. Listen, if you want to know how to get a TP 1, 2, and 3, this is it right here. Even though you're looking for 20 pips only, sometimes that trade can continue to go past 20 pips. And you're like, man, I could have stayed in that trade and caught 25 more pips or 30 more pips or 5 more pips. Well, this is why we do a TDA. I have people ask me all the time, why you put all those horizontal lines on your chart? Well, the reason why is to show you price action and market structure. You're looking at the structure of the market and you're looking at what action price took at these support and resistance lines. Okay. So in this particular instance, you're marking where price is, and price is the dot or the line, the last place. So the market is closed, so it's not moving, but this is the last place price was before the market closed. So I'm marking this, and you can customize your horizontal lines and save them as templates, but I actually customized this and I labeled it current price. So I know exactly where it is. On most occasions, I just leave it red because it's on the daily. And you can also label your daily, your 4 hour and 1 hour horizontal lines, so you know if it's a daily support or if it's a 4 hour resistance, or what have you, because you want to know what support and resistance that is on which time frame, because the higher the support and resistance, the stronger typically it is. The more you go to the smaller time frames, typically they can be weak support and resistance zones. But it's just like taking a hammer and hitting a wall. If you hit it enough times in the same spot, you're going to break through it. So that's what we're looking for. All right. So this is what I do. Daily SNR. This is what my price is. Current price is here. If you want to label it, you just click on it and then click on the text bar and then you can label whatever you want to label it. Click on those little settings here or up here. Click on text and I labeled it. I labeled it daily because I'm on the daily. I changed it to red. This is how you change the colors of the horizontal lines. And then I do it on each time frame. And you click template and then press save and you can actually save it for whatever support and resistance you want it to be. Okay. Yeah, I like that, Ashinda. Chart and chill charity. Chart and charity. I like that. All right. So this is what price is. This is our daily resistance. All right. I typically like to do two above price, the max three, two above price, and two below price. Why do I like to do two above price and two below price? Is because those are my take profit zones. And what I mean by doing two above and two below, I'm looking at the previous peaks above current price, and I'm looking at the previous peaks below current price. Okay. So I'm looking at the mountains and the valleys above and below current price, closest to current price. And I'm putting a horizontal line on the cap. I'm putting a horizontal on the top of that mountain. I'm putting a horizontal line at the bottom of that valley. Those are target zones. That's price action. That's market structure. Okay. This is market structure. I'm really going into it. So y'all have to go through that back office. I got to go through that back office. It's gonna explain to you what you're hearing. Market structure is when price goes up and down, right? And price action is the action that price took at a particular point. So the action here, price went up and it went down and it made a structure, right? This looks like a mountain or it looks like some stairs, some sharp stairs. But okay, so that's what you're looking at when you're putting your support and resistance lines on it. You're looking at the previous high and the previous low in comparison to where price is. And if you ever get confused, you can always take your mouse. Y'all remember in school or coloring books, we used to have these little things called highlights. They had little connect the dots, and when you connect the dots, it make a picture. It's just like that here. Okay, you take your mouse, you use your mouse and go back and trace the line chart. In the first place, it makes a sharp point close to price. Then you can put a horizontal line there. You pull back, horizontal line, pull back, horizontal line. Now, if you do that to every horizontal line, every point, you're gonna have 5,000 lines on your chart. So that's why I say just do two above and two below. Now watch this. This is just the daily chart. I haven't even got to the 4 hour yet. This is what current price is. And this is the first resistance line that I drew above price. All lines above price is resistance. All lines below price is support. So from this point to this next resistance, somebody tell me how many pips this is. No trick questions. How many pips? 150. So with a dollar lot size, that's $150. That's a target zone. We only looking for 20 pips, but that's 150. That's powerful. All right. So let me do this real quick and then I'm just going to go back to the 20 pip and dip strategy. But I want to make it clear why I do this. Why do we put support and resistance lines? I get that question all the time. Well, we do it because those are target zones. We're looking at previous price action and previous market structure. And what we're doing is we're making an analysis saying that the last time that price was here, it was here. And then you're asking yourself, well, what did price do? What action did price do when it bought up to the zone, the zone before? It bought to the zone. So in our analysis, we're saying that it's highly probable that price is going to buy back to the zone because it bought to the zone before. It bought to the zone before. It bought to the zone before, right? And you need two or more touches to make it valid. Okay, you need two or more touches to make it valid. All right, so I'm gonna go through this really quick and then I'm done. Drop some fire emojis. I know some people might be on their phones. Drop some fire emojis in the chat if y'all get it. If y'all understanding what's going on, drop some fire in the chat. All right, so this is my take profit 1, this is my take profit 2, right? And then I'm going to do my support. So you right click on it, you hit clone, it's going to paste it for you. Right, so this is where price is. This is the next point that I see closest to price. And this one right here, if I put my candlesticks back on, you're probably going to see a wick respecting this zone or this area. Okay. All right. I know a lot of people might be on their phone, on a computer, so they can't, but it's all good. Type some twos. Type some twos. If you ain't got fire emoji, type some twos. Want to make sure y'all still awake and I ain't boring y'all. All right. So look, I got my 2 above price. I got my 2 below price on the daily. I'm doing the same thing on the 4-hour chart. I told you guys that you're going to see 6 4-hour candlesticks that make up one daily chart. So sometimes you can see more data or information on the smaller time frames than you could on the larger time frames. And lo and behold, I see that there's a support here, and then there's another peak here that I didn't identify on a larger time frame. So I'm going to go ahead and do that. All right. And even though on the 4-hour it don't look like a big move, we can always verify that with this ruler here. This ruler tells you how to measure, it tells you the pip count. It measures the distance from one point to another, and it tells you the amount of pips it is from one place to another. And I'm going to show you that. All right, 4-hour SNR. Here we go. Boom, yellow, right? Remember, stoplight TDA. Red, yellow, green. Red on the daily, yellow on the 4-hour, right? I got 2 below. I'm about to put 2 below. Okay, look at this head and shoulders right here. This is beautiful. Look at that. Left shoulder, head, right shoulders. That's a pattern. That's a reversal stick pattern. And then it just dropped and it came to my daily support. When you do these support and resistance lines, you should be able to tell a story. Price broke my daily resistance and it went to, this is the daily resistance because it stopped at the end of the day on Friday. Now we only can imagine that price could either sell from here or either buy from here. Now this is a big drop between this point and this daily support. This is a big drop. So really the support should have been a little bit closer from here to here. And then I'm gonna move this up. So I got two below price on the 4-hour, and then I need 2 above price. Now, for whatever reason, I don't see any data above this price point. So that means that I gotta go back in time to see it. Remember, history leaves clues. History leaves clues. So you gotta go back in time in history and it repeats itself. That's what a trend does. It repeats itself over and over and over again. It gives you a pattern. So sometimes if you don't see anything immediately in this zone, you have to go back in time to see what happened between this point and this point if it's a big gap or a big imbalance. So I might have to go back to the daily to see it, but I think we covered the daily, and sometimes you may not be able to put a 4-hour above or a 4-hour below depending on how far the candlesticks are. But you might have to go back in time to find it. But if you can't find it immediately, it's okay. I think our daily really covered this. But when I drop down to the 1-hour, I probably can still see a little bit more than I can see now. Good question, AJ. How far in time should you go? Well, depending on how close, so that's where current price is. There's a nice little gap. I would say this: when the market opens back up, if price breaks this zone, this is 145 pip move right here, zone. So when you go down to the 1-hour time frame, you're going to be able to see a little bit more movement in here, because remember, you have 24 1 hour candles that make up one daily candle. So um as far as going back in time, you want to just be able to see at least two spots above current price on each time frame, and two spots below current price, and those are your immediate target zones. If I can give you guys some parameters, that's what you want to do. All right, so let me go back in time. So I only got four support on 4 hour. I don't have two above um, current price, but I do have two above on the daily. So I do have two daily resistance zones. And I'm trying to go back in time to see if we got any 1 hour resistance, but price hasn't been at this level since I don't know when. All right, so this has been a gradual uptrend over a period of time. Let's see. It's just taking a long time to populate. Awesome. Oh, appreciate it, Dr. Felicia. Hey, I appreciate y'all listening. Now, I pray that y'all learned something, that y'all got something, got a nugget out of it, right? I hope everybody got something out of this. And if you didn't catch it all, but you took notes, go back and read your notes. I'm telling you, it's going to make sense to you. The more you get on these charts and put time charts, put chart time in, it's going to start to make sense. And the light bulbs going to go off, and you're like, oh, that's what that meant. It might not make sense right now, especially if you're just starting, but it will. Awesome. If you took notes, type of 5. Like, the most intelligent people, the people who actually are successful, they take notes and they apply the notes that they take. They don't just take them and then close a notebook and never open it again. They take notes, right? And then they go over it and then they apply what they learned. And y'all might think that I'm smart, but it take me a long time to learn things. I got to go over things over and over and over and over and over again. I don't have that photogenic memory. I think when I was younger, I did, but the older you get a lot of information and learn stuff. That's why short pencil was better than short memory. I would just say I'm a master educator in my own right. I try to break it down in a way that babies can understand. That's why I got the stoplight TDA. All right, so I can't. It's not letting me go back in time, but nonetheless, this is good information that we can trade with, and I think that this is good enough information to do our entry. So at this current moment where we are right now, all right, so we got a two above price, and we got maybe four. We got four below price, and price is in this channel that we're in. And so what we want to see is when the market opens back up, we want to see price closing above where this current price is, because this is really considered like our 1 hour resistance. I could just make this a 1 hour resistance, because this is the market closed at 1600, and this is where price closed. Let's make this a 1 hour resistance. It's going to be green. Okay. I want to see price close above this resistance zone. If price closes above this resistance zone, we do the same thing. It's just like price closing above the 50 moving average. This is support. If this is below this line, it's resistance. But once this candlestick closes above this 1 hour resistance, now it's support. So now we want to look for, once that candlestick close above, then this is what we look for. We look for the candlestick to close above. And remember, we put our long two position right above that candlestick close, right? So we put our entry right above there, all right? But remember, when you mark that candle, it has to be above the 50 on the 5 minute. So when we drop down to the 5 minute time frame, in order for us to get into that trade, we can really put it above that 5 minute candlestick, that long position tool, and then we get in for our 20 pips. That's it. That's how you do it. You mark it on the 1 hour, you come to the 5 minute. If the 5 minute candlestick is above the 50 moving average, you drop your long position tool and you adjust your measurements to 20 pips, and you adjust your stop loss to 10 pips. That's a 1-to-2 ratio. And then you let the trade play out. Now you can change the coordinates without moving this. All you have to do is just right click on the long position tool, hit this little settings bar or gear, go to coordinates, and then, oh, this is the rectangle. You got to make sure you click on the long position tool. Click on the settings, and then you go to inputs. All right, so my account size is 100, so you can put your account size on here too. It's going to give you the percentage that you want to risk. Let's say I'm risking my reward. Really, the risk to reward, this is really how much you're looking at, 15% or 10% or 5%. And then whatever this says, you want to cut it in half. So if I'm looking to make 15%, then you cut that in half, maybe 7 or 6%, depending on your bank account, your account size. All right. But typically for every $100, you really want to risk like 1 to 3%. But you can be a little bit more aggressive. You just have to know, if you lose 7% of 100, then that's what, $7. 100 times 7%. Yeah, $7. You're gonna lose $7 if I'm risking 7%, right? And if I'm looking to make 15%, I'm looking to make 15%, then you just multiply 100 times 15%, 100 times 0.15. That's going to tell you how much money you should be looking to make on that particular trade. Okay, so 100 times 0.15 is $15. Okay, so my goal is $15 on this $100 account. I'm risking 7. I'm risking $7 to make $15. I think that's pretty cool. Now, entry price, this is the level you're putting into your phone on your MT4. Okay, and if you're not using this, you just look to the right. It's the middle line, and the numbers is going to be on the right side. Okay. Now, this says ticks. This tick says 312, but you have to drop that last number. So this is really 31 pips that's up here right now. So in order for me to make this 20 pips, the ticks has to be 200 ticks. These are called pipettes. So 200 pipettes is really 20 pipettes. I mean 20 pips. I'm sorry. And then if my stop loss is 10, you need 100 ticks. So 100 pipettes is really 10 pips. Once you change this, the price is going to change. Profit level, this is your take profit. Stop level, this is your stop loss. And if you look to the right, the red number at the bottom is your stop loss. And if you look to the right, the green number at the top of this green box is your take profit. And the numbers add up, they line up. All right. So that's it. That's how you break down your TDA and your 20 pip and dip strategy. Are you talking about the bank levels, Charity? Yes, there are bank levels as well. And I can put those up there really quick, and then that will be it for me. And I'll turn it back over to you, Charity. So banks like to trade at a certain level. So in order to remember this, just think about when you go to the bank, you typically withdraw. If you're withdrawing money and you go into a teller or even an ATM, they typically pay you in 20s, 50s, and 100. Okay, so those bank levels are called psychological levels or quarter theories. Please don't work on the screen. So basically, the bank levels are these: 0, 0. Think about it, $100. But those last two numbers are whole numbers, right? 0, 0. Then you have 20. I tell people that you can look for 25 too, because that's a quarter, right? 50 and 80. Okay. Now, if you're trading zone to zone and you're doing your stop losses and you're doing your TDA, I typically tell people to round up and down depending on how close they are to those numbers. All right. So the bank levels, I'm gonna leave it green. All right. Bank levels are green. All right. Bank levels 0, 0, 20, 25, 50, and 80. Well, my support and resistance lines. So basically, this support and resistance line is 1.16546. I would just round this up to 50. 1.16550. That would be my institutional level for the support and resistance line. And then this number down here, 1.15292. What would I round this to? Somebody put it in the telegram. I mean in the chat. What would I round this up or down to? Which 92 is closer to what? Is it closer to 0, closer to 20, closer to 25, closer to 50, closer to 80? What is it closer to? 1.16? No. 1.16 is way up here. 1.600 is way up here. That's a big jump. So it'd be, somebody said 300. No. 5200. 5200. Or you could do 15300. Because if I do 200, 200 is down here. So you could do 200, but I would probably do 1.5300. Right. I did. I said no, didn't I? I'm sorry, Charity. That's right. 1.5300. That's correct. I'm sorry. My bad. My bad. But yeah, you would round it up or down to the closest number. And for whatever reason, these institutional levels, they get respected. They get respected. And you go back in time and you back test those institutional levels. When you do your, look at this. Sometimes it can give you a wick entry. Really quick, and then I'm gonna turn it back over to you. But you can already see that support and resistance zones, it doesn't have to be perfect, but those institutional levels will get you close to on point as possible. Let me see. All right, coordinates. You can change the coordinate numbers too on your support and resistance lines. You just click on coordinates. You right click on the line, you click on coordinates, and it usually lets you change it, but it's giving me a hard time right now. It always want to give me a hard time when I'm trying to teach. Come on, man. But you guys get the drift. You get the drift. You use those bank levels. It's going to just help you to get cleaner entries. 5300, right? Hit OK. And it might look like a major move. It may not look like a major move, but when you zoom in, you can it's probably going to have a lot of a lot of points touching that particular zone. And if you look right here, This whole zone is a consolidation zone. And with those 0 zeros, those are typically psychological numbers. Those are typically psychological numbers. Yeah, it's a lot of respect right here. I'm sorry this is taking a little bit longer than what I wanted. My trading view is not cooperating. Right, the enemy he's a liar. We got the victory. In Jesus' name. All right, so we have touches here, touches here. Look how clean the market is respecting this area. Sold down, broke, respect. Even we got a last side of sell to buy here. It's one red candle right here, respected. But these institutional numbers, that I'm telling you, they definitely are numbers that you want to pay attention to. All right, Miss Charity, you got it. I pray that you guys learned something. Thank you all for your time. Um, I really do appreciate you guys. I hope you guys learned something. God bless.
Thank you so much, Clyde, for coming on through for us tonight. Everybody drop those sevens in the chat. If you learned something, drop those sevens in the chat. We appreciate it. Thank you so much for giving up your time on a Saturday, coming through to help us. I know personally, I love to send people to your calls in the morning because I feel like you are the best teacher for newbies. And even some of us who've been around forever, I'm sure they still log on because you always catch something new. You always grasp a decent understanding once you get on Clyde's calls. Last but not least, guys, our schedule again is Sunday, Tuesday, Thursday at 6:30 p.m. Eastern Standard Time, and those sensational Saturdays and chart and chills are always to be determined. Clyde, once more, thank you so much. I appreciate it.
You're welcome.
All right, guys, with that being said.
Thank you.
Hey, Clyde, really appreciate you stopping by, dropping these golden nuggets and all this sauce all over the place. You know, I'm about to put some on my food to eat tonight, you know? About to drip a little something on the charts, you know?
Yes, sir. Yes, sir. Yes, sir. I appreciate y'all again.
And you guys, if you're in the study group, I do post those links to the study calls or to the live session calls as well. I do that every morning for